Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and my goal with this series that you're going to see today is to show that anyone can create a growing source of completely passive income. Now, if this happens to be the very first time you're even hearing of this series and you want to know what it's all about, I'm going to link the first episode above my head so you can go back and watch that and see what I'm trying to accomplish with this series. In that first episode, I explained things like why I picked the stocks I picked, how much and how often I'm going to be investing, and the overall goals of this portfolio. Once you're caught up there, feel free to watch the other episodes in order so you can see the natural progression of this portfolio, or you can just come back to this episode to see where we're currently at.
You're the one missing out on all the fun.
With that being said, if you are already caught up and you're here for your bi-weekly update, let's get to it. In today's video, I'm going to start with a quick refresher on where we left off at the end of last episode. Then I'm going to jump right into where the portfolio currently sits, how the most recent buys are impacting my cost basis, the all-time best and worst performers in this portfolio, my projected annualized returns based off of the current returns, any dividends received since the last update. I'm going to forecast my upcoming dividends and then wrap the video up with any news or things of note in this portfolio. Now, since it's been 2 weeks since the last update, let me quickly show you where we left off. All right, and like I said, as of last episode, this is where the portfolio sat. So we had a goal of $110 per holding. Our previous account balance was sitting at $1,354.50, and this portfolio was in the green by $29.43, or 2.24%. So now let's go ahead and get a look at where we are right now. And as I've mentioned 1,000 times already, remember that every other week, $60 is automatically added to this account, and $5 is automatically invested into each and every one of these positions, keeping it as even as possible. All the information you'll see in today's video is as of the close of market on November 15th of 2024. This portfolio is now 44 weeks old, which gives us a goal of $115 per holding, and our new account balance is at $1,456.54. So next, I want to show you how that $5 every other week, that bi-weekly $5 that I add to every position, has changed the cost basis not only since I first started these positions, but since last episode 2 with this screenshot right here. So you guys will be able to see it says the ticker on the far left, and then episode 1, you guys can see what my cost basis was split adjusted, because I did have, I think, 2 stocks do splits since I started this portfolio. So this is split adjusted. You can see what I started all of these positions in, and then what it was. The next column is going to be episode 22, which was last episode, what it was last episode, and then where we're sitting right now. And then the last column just shows you the difference between last episode and this episode. Keep in mind that the green means our cost basis has went down, which is a good thing, which is why I highlighted it in green. And the red means our cost basis went up, which you can say is a bad thing. That's why I highlighted it in red. But that also means, in theory, I should be in the green. I should have made money in all of those positions, since it's now costing me more to own those shares. So in total, you guys can see that I increased my cost basis in 10 of my 12 holdings, which means I decreased my cost basis in 2 of my holdings. My biggest increase in cost basis since last episode goes to Intuit, or INTU, that went from $630.52 per share to $632.93 per share, while my biggest decrease in cost basis once again goes to Humana, or HUM, which went from $338.73 per share to $335.07 per share. So now we're going to take all this information. I'm actually going to show you guys who's the best and who's the worst performers in this portfolio with this right here. So if you guys have seen the last couple episodes, nothing's changed here. We actually have some stocks that are creeping up on our best performer, and hopefully we have our worst stock that's creeping down on the rest of our stocks, or I guess I should say creeping up. I don't know, whatever. Hopefully Humana stops sucking so much is what I'm trying to say, and hopefully other stocks can catch up to Broadcom, because right now AVGO, or Broadcom, is our best performer and has been our best performer for some weeks now. It's up $16.38, or 14.34%, and as I spoiled the cake on, or spilled the milk, spoiled the, whatever we're doing, Humana is still our biggest loser. That's down $20.38, or 17.73%. So you guys actually can see here, AbbVie is my only other stock in the red in this portfolio. So that's really nice to see. In total, I have 3 positions that are up double digits, which is that Broadcom, CSL, and it looks like MasterCard is also up double digits. So you like to see that. Bunch of stocks that are close to that double digit mark. So stay tuned. We'll see if they can break the mark. But one thing I did want to draw attention to is down here at the bottom. This portfolio is back in the green by $70.45, or up 5.13%. So for anybody new here, you guys might not have seen this on any other channel, but what I do is I compile these numbers and put it into a simple chart so you guys can see the ebbs and flows of this portfolio over time, which I'll share with you right here. So as I mentioned, this shows you at the conclusion of every week, or I should say when I'm starting to do my recordings for these episodes, I take a screenshot of that number that's down at the bottom that I just read to you and put it in this this portfolio, this whatever this is called, the table, and I share with you guys the ebbs and flows, like I just said. So you guys can see all the way back to episode 1, the portfolio just started, all the way down to episode 23, which is where we're at now. So you guys can see in episode 21, we were actually up $75.55, which is our record so far. Episode 22, sorry, we had the pullback back down to $29.43 in the green, but now we're back up to $70.45. So we're having those ebbs and flows like I talked about, but it looks like we're starting to not only stay in the green. Since episode 19, we've been in the green every episode, and that's, like I said, 2 weeks in between all of those, so that's actually a pretty good stretch right there, and hopefully we can keep that up. So total $70.45 in the green, like I said, 5.13%, which gives us an annualized projected return of 6.06% over the 44 weeks that we've done, if you were to, stretch that out over the rest of the year kind of thing. So we'll see if that holds true. We'll see which one of these weeks were the closest by the end of the year. We'll see, or not the end of the year, the end of a year in this portfolio, we'll see. But as I mentioned 1,000 times already, my segue is always, this is a dividend portfolio on a dividend channel. So I want to show you the passive income created by this portfolio with this right here. So the screenshot you're going to see right here is just since the last episode. Don't think this is only the only passive income I made in this portfolio, but I've only made this income since, 2 weeks ago. So I've received 2 payments since 2 weeks ago. So that's 1 per week for anybody keeping score. So on November 8th, we received 14 cents from MasterCard. Again, for anybody brand new, we're not writing checks home and, sending postcards telling everybody the good news yet, right? We're building the portfolio slowly but surely. My portfolio that's now bringing in, a couple hundred, like high 100s, low 200s a month, started out just like this, bringing in pennies a month. So stay tuned, stay with it. Just trust me. So November 8th, MasterCard brought in 14 cents. If you look at this screenshot right here, you guys can see the growth of just this MasterCard payment since we've had the position. So back on May 9th, 4 cents from MasterCard. August 9th, 9 cents from MasterCard. And then we're at November 8th, 14 cents from MasterCard. So again, we're not expecting a doubling every time or anything like that. We're just slowly but surely, every dividend payment we're going to get, in combination with the capital being added to these positions and these companies raising their dividends, all this money is going to keep going. So in total, MasterCard's now paid us 27 cents or 4.43% of the total dividends received in this account. And then on November 15th, the day I took this screenshot, AbbVie paid us 88 cents, which is a lot for this portfolio. AbbVie has a pretty good yield. And then if you look at the same screenshot, but this time for AbbVie, on, May 15th, we received 31 cents. Then on August 15th, we received 59 cents. And then here we are on November 15th, we received 88 cents from AbbVie. In total, AbbVie's now paid us a whopping $1.78 or 29.23% of the total dividends received in this account. So I'll save you guys the mental gymnastics and I won't make you guys do the math because I'll share with you guys this screenshot right here. So in this screenshot, it shows you my monthly totals. Either if the month's already concluded, that's what I finished with, or if the month's still going like November is, that's where we're at right now at the time of recording. So if you look all the way down here towards the bottom where it says Q4 November, we are up to $1.08. So for anybody that's actually been watching a couple episodes in the past, you guys know that I said I had a feeling that we would be hitting over $1 every month in Q4, and so far I'm right. So October, obviously $1.11. November, we're at $1.08. I'll show you guys a little bit later. I don't think I have any other companies paying the rest of the month, but I do have my interest payment that'll come in. I don't know. We'll just say 10 cents, give or take. Probably, 8 to 12 cents. I don't know, somewhere in there. So that'll be added to November, which is cool. And then we have the rest of December. I think, like I said, we're going to be over $1. In total, our quarter sum is up to $2.19. Keep in mind, obviously, November's not done yet and December hasn't started yet. So that's looking real good. Total for this portfolio so far this year, we're up to $6.09. Keep in mind, we're adding $60 every other week. The point of this portfolio is to get paid frequently with high quality companies that grow their dividends, all with small sums of money to show that anybody can do this. I'm not putting in hundreds or thousands of dollars a week. I'm putting in $60 bi-weekly, every paycheck, $60. That's it. So just go to, DoorDash one less time, and you guys can do this too. You guys can create your own source of growing passive income, like I said in the intro. So last thing I wanted to do, I actually forgot to do this in the last episode, so I quickly wanted to share with you one dividend increase from last episode and then one dividend increase from this episode with this right here. So on October 30th of 2024 of this year, AbbVie announced a 5.8% increase to their dividend, going from $1.55 per share per quarter to $1.64 per share per quarter. That'll be paid to all of its shareholders on February 14th of 2025, as long as you owned it before January 15th of 2025. So again, that's a 5.8% increase. If I don't add any more money to that dividend I just received from AbbVie, it's going to go up by 5.8%. Obviously, I'm going to keep adding money, and that dividend's going to increase. That's how you get the compounding effect that I was talking about. So that's the first one. That's the one I forgot to do last episode. And the one that I just found this episode is on November 14th. PHM or Plute Group announced a 10% increase to their dividend, going from 20 cents per share per quarter to 22 cents per share per quarter. That'll be paid out on January 3rd of 2025, as long as you owned it before December 17th of 2024. So again, that's a 10% increase, but then you look at the numbers, you're like, oh, Troy, that's only 2 cents. Who cares? That's 10% more money that I'm going to get whether I put money in this stock or not, any more money in this stock or not. And like I said, it doesn't sound like a lot because it's not. It's only 2 cents, but that's per share per quarter. You start owning multiple shares. Obviously, there's 4 quarters in a year, so you're going to get multiple shares paying you 10% more 4 times a year. That's how it works. That's the compounding effect right there. So this next screenshot right here, I spoiled this a little bit earlier in the video. We don't have anything scheduled for the rest of the month. We have, like I said, the Dillards and MasterCard paying in the same week, and then AbbVie's in there, and then other things pay before or late or whatever happens. But so far, I'm not expecting anything else for the rest of November. We will see if that holds true. I do know on the 29th of November is the last weekday of the month. So therefore, SPAXX, which is all the money that comes into this account, like the dividends and any money that doesn't let me spend, that's all sits in that account or that position, the SPAXX, and it gives me that interest, which, like I said, I will add 8 to 10 cents, 8 to 12 cents, whatever it is per month into there. So that's pretty cool too. But that's going to wrap it up for this bi-weekly update to the Anyone Can Invest portfolio. If you guys do enjoy this series, please let me know that by leaving a like on this video. It's free to you and helps me out a lot. And if you guys have any questions, comments, or concerns, leave those in the comment section down below, as I personally read and respond to every single one of them. And just like I spoke about earlier in the video, if you guys want to take a look at my dividend portfolio that started out just like this and see where it's currently at, make sure you check that out right here. But until next time, see ya.